I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. U.S. farmers are on track to rake in a massive corn crop this season, according to the USDA's latest WASDE report released this week. Ahead of the month's report, market watchers had been expecting the agency to raise yields, but that also came with larger acres. The 2025 corn production estimate came in at a record 16.7 billion bushels. The USDA offered a surprising 2 million acre increase to the harvested acreage forecast compared to the June acreage report. The agency also raised the average yield to 188.8 bushels per acre. To complement higher supplies, demand for the 2025-26 season was raised by over 500 million bushels compared to last month, including increased exports, feed and residual usage, and corn crushed for ethanol. As higher demand was unable to offset the larger supply boost, U.S. corn ending stocks were raised by 457 million bushels from July to 2.12 billion. If realized, that would be the largest carryout since the 2018 and 19 season. Looking at the soybean balance sheet, while corn acres got a boost, soybean harvested acres were reduced by 2.4 million acres, down to 80.1 million. Yields, however, were raised by more than a bushel to 53.6 bushels per acre. That brought the total production forecast down to 4.29 billion bushels. The 2025-26 carryout was lowered to 290 million bushels, down from 310 million. The reduction reflected a lower production as well as lower beginning stocks, offsetting a 40 million bushel reduction in the export forecast for the upcoming season. Smaller changes were made to the U.S. wheat balance sheet. The USDA lowered its 2025 wheat production forecast to 1.927 billion bushels, down just 2 million bushels from the previous estimate. Exports were raised by 25 million bushels, reflecting a strong early pace of sales and shipments. The total 2025 and 26 carryout was reduced by 21 million bushels to 869 million. Lastly, for the crop side, the USDA lowered the cotton production forecast to 13.21 million bales. That was down from 14.6 million in July. The large reduction was due to a 15% reduction in harvested acres from dryness in the Southwest, increasing abandonment rates. To account for lower supplies, the 2025-26 export forecast was lowered by 500,000 bales, though 2024 and 25 exports were raised by 100,000 bales. With tighter domestic supplies, cotton ending stocks for the current year were lowered by 1 million bales to 3.6 million. Keeping alongside on the WASDE, lower red meat production was the theme for this month's report. The USDA lowered its 2025 beef production forecast due to reduced fed and non-fed cattle slaughter and lighter dressed weights. That theme is expected to continue into 2026 with fewer placements in the second half of this year. Due to the higher tariffs on imports from Brazil, the USDA lowered its 2025 and 26 beef import forecast. Meanwhile, beef exports were also lower, reflecting those tighter domestic supplies. Total beef supplies are expected to decline over the next 2 years. Supplies have been fairly steady through 2024 due to higher imports, but by next year, the total supply could fall to the lowest since 2019. A slower slaughter rate and reduced dress weights are expected to drive 2025 pork production lower compared to the previous forecast, which is expected to carry into 2026. Pork exports were raised for 2025 based on official data reporting. However, shipments are still expected to be 2% lower than the record set in 2024. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.